Now we are going to discuss one of the most known pattern, that is the cup and handle pattern, and we are going to discuss how important this pattern is and what are the intricacies about the pattern, what to do and not to do in this pattern, and how to look out for it. So basically, as the name itself suggests, there is a cup and a handle. So there is usually a U-shaped forming at a round and also called a rounding bottom, and after that, once that is done, then a handle is formed. So we're gonna look into that how we can assume that this is a cup and handle pattern. So basically it is a continuation pattern and it needs to have a prior trend, and to qualify as a continuation pattern a prior trend should exist. Ideally the trend should be a few months old and not too mature. The more mature the trend, the less chance that the pattern marks a continuation or the less upside potential. So what important is that if we are gonna swing on the basis of cup and handle, we need to have a really strong mature pattern that could be an uptrend or a downtrend. So if the previous prior trend is not mature, then it is possible that the breakout wouldn't be very strong. So now we are going to look into the cup and what to look out for. The cup should be U-shaped and resemble a bowl or rounding bottom. A V-shaped bottom would be considered too sharp of a reversal to qualify. The softer U-shape ensures that the cup is in a consolidation pattern with valid support at the bottom of the U. The perfect pattern would have equal highs on the bottom sides of the cup, but this is not always the case. So why do we want U and not a V? Because the V would not give us a sign of a consolidation on the support line. So what we want is that we need an accumulation area or a consolidation area after a prior trend. So basically what happens, and we discuss this in day trading, that before the next leg the price needs to consolidate, right? So most of the time that consolidation happens in a bull flag pattern or in a sideward trading pattern, right? So that's why in same logic is used in the swing. Therefore if there is a very sharp V over here, then there would be no signs of consolidation. It's just gonna be a very sharp drastic change. Therefore we need a U or a rounding bottom which would suggest that the market has consolidated and now it's ready to for a breakout. So here you can see the lower lows told us that we have some good support area over here, and if we look at it very accurately, this is also kind of an inverted head and shoulders over here, where it have formed the left shoulder, the head, and the right shoulder. So basically what we could have done, we could have draw a neckline from this area to that area, and that would have worked as well. So basically it looked like a inverse head and shoulder to me too. Furthermore, when that neckline break, we gonna see some some breakout on the upper side. What is the cup depth? Ideally the depth of the cup should retrace 1/3 or less of the previous advance. However, with volatile markets and overreactions, the retracement could range from 1/3 to half. In extreme situations, the maximum retracement could be 2/3, which confirms with Dow theory. So basically the depth of the cup should be 1/3 or maximum 2/3, not more than that. Handle: after the high forms on the right side of the cup, there is a pullback that forms the handle. Sometimes this handle resembles the flag or pennant that slopes downward, other time it is just a short pullback. The handle represents the final consolidation pullback before the big breakout and can retrace up to 1/3 of the cup's advance, but usually not more. The smaller the retracement, the more bullish the formation and significant the breakout. Sometimes it is prudent to wait for a break above the resistance line established by the highs of the cup. So a handle could be a bull flag, it could be a pennant, or could be a short pullback, but the shorter the pullback, the stronger the breakout it would be. So always keep in mind how when a cup and handle is forming, it's one of the most profitable patterns out there. The cup can extend from 1 to 6 months, sometimes longer on weekly charts. The handle can be from 1 week to many weeks and ideally completes within 1 to 4 weeks. Volume: there should be substantial increase in volume on the breakout above the handle's resistance. Target: the projected advance after breakout can be estimated by measuring the distance from the right peak of the cup to the bottom of the cup. So So for a target, what we can do, the projected advance after breakout can be estimated by measuring the distance from the right peak of the curve to the bottom of the curve. So okay, so this was the right peak, right? So if we use the right peak of the curve to the bottom of the curve, that would be around, this is maybe, let me guess, this is 18 area and this is 28 area, so around 10 cents, right? And after 28 breakout, what we can do, 10 cents to the top, that is 38. So see how this is a classic cup and handle example. And now we're gonna also discuss another cup and handle example in the next video.